Okay, we've got more people.
All right, we can go.
All right, let's go to the order. Is the meeting properly noticed?
Yes, it has.
Any public comments or correspondence? Jason, so do we have any,
We don't have the live stream,
we don't have a live yet?
not yet, no.
Okay. Do we have any, Jason, we have any correspondence or comments or anything? Communication?
No.
Okay. Make a motion to approve the minutes, please. Aye. All right, council report.
Is on Zoom.
Good morning. Can you hear me?
Good morning.
Do you have any questions, first of all, about our report?
Any questions? I guess the only question, and you know, I think I know the answer, but so far year-to-date actual no revenues, is that just a timing issue?
Yes, that should be just a timing issue. Those are reimbursed from the state on a quarterly basis. So for the first few months, I don't know exactly what date they come in, but there's definitely a delay after the end of a quarter. But there may be some new committee members there today. Just a little background information on the child support budget, which is the majority of the Corporation Council's budget. We get reimbursements from the state for roughly 2/3 of our expenses. Those are submitted to the state on a monthly basis, and then on a quarterly basis, we get reimbursements from them. A lot of the funding comes also from the federal government for child support services.
Okay, and with everything that's going on, nothing's delayed or because of COVID or anything?
I haven't heard anything. Rick hasn't mentioned anything to me. He submits the reports for reimbursement. We're sort of short-staffed around here in terms of being in the office every day. Our child support workers have been coming in 1 day a week since the shutdown. We just started this week going to half-time in the office, half-time home. So we'll have the same crew here when they're here, they're with the same people, and then they sort of switch off 2 days a week, 3 days a week now going forward until things change, particularly maybe with the county reopening the administration center, that sort of thing. But we're still trying to keep the population in the office down while still getting back to some semblance of normal here.
Okay, great. Any other questions on the report? So anything new going on because of the situation? Anything making you more busy?
You know, perhaps some of the Chapter 51 mental health commitments, I think there's a little bit of an uptick on those, and that wasn't immediate. It's been in more recent weeks. We've had a lot of 3-party petitions coming in, which is unusual. But other than that, probably not. It's just a matter of learning how to work when you're not always in the office, getting adjusted to doing court hearings by Zoom, which is not ideal, I would say. A lot of the times the connections work well, but now and then they don't work very well. And it's a lot of frustration for everyone involved. we have to provide due process hearings with rights of confrontation and rights to present testimony. And when that technology is not working well, it doesn't put us in a good place to be sure to be complying with all constitutional requirements. So I would say that the courts are looking forward to getting back to holding these types of hearings in person again. So, but we've done the best we can with Zoom, and by and large, it has worked well, but it's not ideal.
I'm sorry, do we know when the courts are going to be back open, or is that decided yet?
They are working on a plan that has to be approved by the chief district judge, and then they should be somewhat back in normal operation. They're going to start with some of the more, I guess, constitutional type of hearings, like criminal matters where there's heightened protections. I think they're looking at those first, and then we'll be moving on to our types of cases, and then on to other civil matters in general.
Okay, thank you.
Jury trials will be a challenge. I think that's the biggest challenge that.
Yeah, fortunately, we rarely have those, fortunately. I've got my fingers crossed that we won't have one before things are back to normal.
Any other questions for Rhonda or anything else, Rhonda?
I can't think so today.
All right.
Thank you. I will exit.
All right, sounds good. Thank you.
Have a good day.
You too. All right, action items. Do we have something that's changed on the agenda, or?
Jason, I think is going to speak to this first. This is the increase of revenue.
Yeah, so the transfer of funds for the Interurban Trail Grant, that has not been accepted by the Natural Resources Committee, so we'll wait for them to take action, and then we can deal with that at a later time. Obviously, that was tied to our plan for our capital funding process, which we put on hold. So we'll return to the Natural Resources Committee to discuss the approach on that grant and how we proceed, and then we'll bring it back to Finance Committee. So we can take that off. We'll just eliminate that from the resolution that goes to the board. So no need to talk that one through today.
Okay, so if I got this straight, we're talking about coming off of
The first three.
668, yep.
okay.
First one. First group.
So otherwise, everything else is there more included in this one?
Yes.
Everything else is.
Everything else is before the committee today, but the Interurban Trail Grant will be.
So to be clear, the revenue's off there, right? And
We have not accepted the grant.
and the two expenses are off there.
Correct.
Correct.
Okay.
First three line items.
And can I just ask, is there any, why has it not been accepted yet?
But obviously, things have been delayed due to the pandemic.
Oh, the pandemic, I didn't know if the committee actually had some issues that they brought up if they met.
No.
Okay, okay. All right, makes sense.
Andrew is on Zoom if you have any other questions.
Okay, otherwise, Andrew, the bike trail repaving's all on, we're hoping that's gonna be on track to go, right? Next meeting.
Yeah, can you hear me all?
Yes.
Yeah, good morning. Yeah, as Jason said, we're just delaying action through NRC, and then it'll be back before finance. So what we can talk about it at that time. So hopefully we can still proceed, but we'll have to discuss that.
All right, okay, understood. All right, so I have a motion to approve 6A?
We want to approve it before. Okay.
Without the first three items in there, right?
As revised,
As
without
revised, right.
removing those first three items.
Okay, I'll make the motion to approve. Do we have a second?
I'll second it.
Okay, Supervisor Winker, seconds. Any discussion? All those in favor? Aye. Okay, action item 6B, resolution amending the Ozaukee County Policy and Procedure Manual, Chapter 5.01, 15-A, designation of depositories.
Yes, good morning, everybody. Well, during this time, periodically, I like to hop into our policy and procedure and make sure our depository list is up to date. One of the main things I want to get removed on here is if you look at item 10 with the strike through tentative Bank Mutual from Cedarburg. We haven't used them in years, and they've merged with Associated Bank, so I want to get that obviously updated. But I don't want to just delete something. I'd rather remove and then add another depository. And I would like to actually get Charles Schwab added to this depository list. If you look at my background information, it's pretty cut and dry as far as that goes. What I want to do is take all of our money market account, which is used to purchase our marketable securities with Dana Investment Advisors, and those are being held at U.S. Bank currently, okay, and it runs us about, they've increased their fees. If you look on here, it used to be about $2,600 annually, and that's been steadily going up too, but it's been driven up to $7,500 annually. I'd like to, my main purpose for this was actually getting an account that we can work with Dana with that costs us nothing. So Schwab actually does do that for us. I have actually taken advisement and counsel from Dana on this matter. I do like that, and I'm just asking that we get that on, at least be given the opportunity to be allowed to work with them. First step is, of course, getting them on this depository list.
Why do we have so many on this? Why do we need 12?
Honestly, I haven't touched too much on the depository list. The idea with the depository list that I could figure, I questioned the amount too, Supervisor, years ago. What I gathered from this is it doesn't necessarily mean we have an account with them. It just gives us the ability to work with them. So.
And how many would you say that you really do work with?
Right now, well, I don't work with Tri-City at all. I do not have anything with JP, but we work with them with our P card. So, or at least we used to. So I don't think we have anything with them anymore.
Do you have anything with
I
U.S.
can
Bank?
clean that up more if you guys like. I haven't utilized American Deposit Management. These guys would only be used if I had excess funds to invest. I haven't utilized them yet. I certainly don't mind spiderwebbing our funds. I've always promoted that. I think that's wise. You know, they always say don't put your eggs in one basket. So.
Well, doesn't this give you the ability to shop around and see, okay, I'll check Tri-City or check this other one, even though we aren't using them at the moment? You can. Correct.
And usually what I do with our depository list, the main thing I look for is obviously where we're going to gain the most interest earnings from. And, you know, generally what we've seen out of this is I've either had Port Washington State Bank almost always come back and be top, or I will take the investment of funds with Dana. So
if U.S. Bank is increasing their fees, do we just not use them then?
Yeah, I mean, we can keep them on the list if we want to consider further excessive or funds in excess that can be invested. But at the moment, no, there would be a zero balance with them.
Which means there's no fee then?
Correct.
Well, it sounds good to save $7,500 a year.
Yeah, I figure I might as well make money with it instead of spending it, so, you know.
Other discussion? Do I have a motion to approve?
So move to that effect.
In a second? Okay, all those in favor? Aye. All right, thanks, Josh. Action item C, wire transfers, number 3035 to 3083. Schedule of vouchers, December 2019, February, March, and April 2020. Any discussion? Or make I have a motion, sorry. What? You have a motion?
You're the only one that goes,
Yeah.
wrong.
Right. Yeah. Okay, do I have a second? Second. Okay.
If you wouldn't mind, Mr. Chairman, just help me through this. I don't know, Dave, if you've been on finance in the past, but this is the first go-around for me. I've never been on finance, so just, this is the one part I don't understand.
Treasurer, can you come back and help us with this? Make sure I would rather have, Josh explain it, because he's more sure about what these are.
Basically, what we need done here is, these are all the wire transfers that we have completed over the last, well, since we last met. We're looking at that right here. So all of these are wire transfers that we've paid out, and those obviously, they've been paid, but by our policy and procedure, that has to be approved by all of you and countersigned by our finance committee chair.
It's required by statute that the finance committee approve these wire transfers.
These are essentially bills that we.
Yes.
The money's been sent to the different institutions, so you're sort of looking back and approving them.
So real simple, item 3035, first one, card member services. Obviously, that's the county's credit card,
Yes.
and you pay it monthly.
Correct.
In this, I've never really quite asked that question, so.
So we use the credit card pretty extensively to pay every bill that we can because of the cashback program. It actually raises about $90,000 of revenue for the county on an annual basis. So that's what that payment would be.
So, while here at the top, I can hand you these, but these are the wire transfers themselves that we sign. But can I ask a question too? Now, so the numbers are a little bit different. I noticed many times. Okay, so from what we have on here.
What are they different?
What are they different?
Okay. You open up a can of worms here, maybe. Can I have that back? I'm sorry. So if I'm reading this correctly,
I know we had
all right, like
this is made.
wire transfer 3055, for example. Oh wait.
3055. Payroll taxes. Yeah. Let me see that.
Well, here's the
I'm
thing.
gonna pull it up here, Paul. I'm just gonna
Okay.
open it up here. I think I might know what you're talking about here. Let me just.
You know, I take it back. I guess what I was looking at is the ones 30. They all, I guess they do match properly. I was looking at the first sheet versus.
They should match.
Yes.
Okay. I saw a couple here that were like
Either
close.
that or you'll be going to jail.
Yeah.
Because Tom asked the question, I was double checking with you.
Dave, that don't line up on here. There's transpositional issues. That would be.
So, sorry to scare you, my bad. But because Tom asked the question, I was double checking and I looked at anyway, it was the one from March versus the one from April.
Okay.
They were close, but they were just a little bit different. Anyway, back to your explanation, sorry.
Otherwise, the only other thing I'll add on this is you guys could see our March debt payment. Our interest and principal payments went out perfect, so they have to be to the penny. So there's some extensive work that's done between me and my deputy to ensure that happens, that all the CUSIP numbers line up, and that everything's paid on time. So, and that went out miraculously. So if they didn't, we'd hear something from DTCC, so a deposit trust company. So, but it went out just fine. So.
On the second page, towards the middle of that, lottery and game credit settlement to the Ozaukee municipality school district. How's
Yes.
that? Looks like it's $2,854,000.
Yes. That's part of our,
Later and then you distribute it, or is that for?
yeah, so these are, if you look on your tax bill, you see your lottery and gaming credits. So that is these are the monies that come in from the state that I have to distribute to the municipalities and school districts. So that is the grand poobah. And for the record, it tied out amazingly. So.
I don't know, you know the workman's comp claims, so is that gonna be, so we have those in here that we pay out, right?
Yep.
With all this is going on with the workman's comp, you see in the news, is there anything weird with that? Is it?
As far as paying it, I've had no issues. I think that might be something to touch on with, I think we get that wire out from Laura, so I think that'd be something to touch on payroll. Yeah. Yeah. So, right.
Any other questions on this? Any other insight?
No, all the wires are paid, they're paid on time, they're paid to the penny, and no overdrafts. Thumbs up, just throwing that out there. That's what we always like, right? It never happened on my watch, never will, so.
Hopefully that's pretty good.
You're at that home.
Anybody have any other questions on this? All right.
We're self-funded for workers' comp, just for the new committee members. So we don't pay into the workers' comp system, we just pay claims as they're received and administered by Aegis for us, so.
All right, we have a motion and a second, correct? Yes. All those in favor? Aye. All right. Thank you. All right, discussion items. Ozaukee County Portfolio and Market Update, Dana Investment Advisors. We have some of them here on Zoom.
Yeah, I'll just take the opportunity real quick to introduce Matt Slowinski and Ellen Roberts from Dana Investment Advisors. Throughout my time here, I have been working with them. I've been wanting to do this for some time, so I figured what better way than bringing it to a new finance committee, just to have a good portfolio update on what's going on, especially given everything that's been going on with the economy, how that affects our rates and whatnot. And they've always given me a wonderful breakdown of what they're seeing, what the trend lines are showing, and I wanted to give the opportunity for them to report all of this to all of you guys too, as far as our portfolio is concerned. Hi, Ellen. Hi, Matt.
Hi. Thanks very much for that, Joshua. We appreciate it. Matt is going to share the presentation. I think that you've got an electronic copy as well, but Matt, you can just pull up our book, share that. Feel free to ask questions as we work through this information. I'll just quickly let you know that as a firm, as an investment advisory firm in this business, just tighten your chin strap. This is certainly something very unusual that we're all going through, but our firm is very healthy and strong. We have not laid anyone off. We continue to pay our core employees and conduct our business as normal. Normal being sometimes from home, sometimes from office work, but we're all very equipped to do our work from home as needed. The firm manages equity assets in addition to fixed income assets. Of course, for Ozaukee County, it would be exclusively fixed income assets. But very strong firm. We advise funds over $6 billion right now as of quarter end. Our firm is based, if any of you know the area, we moved about 2 years ago. We're in Waukesha. We're right off of I-94 going west near the Barker Road exit. So you can even see our building from the freeway there if you ever pass by. But very proud to be based here in Wisconsin, and again, very proud to work with many municipalities throughout the state. What we do is manage surplus funds, as you know, for Ozaukee County. and that relationship has been going on for quite some time. So we thought what we'd have Matt do is review our performance and give you a bit of our market economic outlook right now. Do you have maybe 15 minutes for him to work through the remaining slides? Does that fit with your schedule?
Sure, that should be fine.
Okay, good. I'll turn it over to you then, Matt.
All right, thanks, Ellen. Thanks for having us. I'll keep it relatively brief, as Ellen said, and keep my comments to kind of the portfolio and then our market outlook. If you have questions, certainly jump in. Like to keep it conversational, certainly want to address any questions or concerns you might have. So as we typically do when we meet with the county, we would start with our portfolio performance update, which is on page 4 here. You'll see you've got a couple different ways that we break it down. The upper left of the slide has your account activity from an accounting standpoint. This shows your portfolio value, beginning value as of the end of the year, end of 2019 at close to 5.7 million. Ending on 4/30, you're at 5,721,000. So total gain is over 31,000 for just that 4-month period. And I would point out too, when you look at those items that break that down, your investment income is over $50,000 for that period. And one of the things that we do when we structure portfolios is we really try to reduce the volatility and limit the risk in the portfolio. And that's really evident when you look at the unrealized gain loss column, which is about the 4th one down there. You'll see you've got an unrealized gain of $4,500. And I would say, that's kind of the intention of the way we manage money. We don't want to see massive swings in market value just based on pricing. Our goal is to drive income for your portfolio, not to take bets on where rates are going or things like that. And obviously in this period with what's going on with the coronavirus and kind of the market turmoil we saw in March, we're pretty proud of the fact that we were able to drive some high income at over 50,000, but have very little price impact on your portfolio. When you look at the right-hand side, you'll see the portfolio allocation. We've got a short amount of money there in short-term investments, so that's really kind of money market that we put to work. Typically, we keep a little bit of cash and work with the staff there just to make sure that you have any cash needs. We have cash available for you. Otherwise, we generally would buy a position size somewhere around 200,000 in this portfolio. So, it's something we're always looking to do, is make sure that we're buying the proper investments and getting the best yield possible on the money that we're investing for you. In agency bonds, we've got about 17% in agency bonds. Those are really short agencies. Most of them are callable. So, you can think of something inside of, call it 3 years to maturity that could be called out by the issuer. We use those for a couple different reasons. One, primarily, they're a great liquidity vehicle. We can sell them for next day settlement. There's very tight bid-ask spread in those types of securities, so they're very liquid, as well as they offer a significant yield advantage when we have callable structures. They generally would get you somewhere between 20 or 25 basis points, or about 0.25% over a treasury bond of a similar maturity. So they offer significant value, so we like to keep an allocation to those. The other 2 remaining allocations you see there, small business administration bonds and then the mortgage bonds, make up the core of the portfolio. Both of those allocations are adjustable rate securities. So the rate on the coupon will float off of market rates. In the case of the small business administration bonds, it floats off the prime rate. The mortgage bonds typically float off of a 1-year treasury or a 1-year LIBOR rate. And there's a couple reasons we use those. Obviously, one I already mentioned with the limited volatility standpoint. Because you have a floating rate security, your rate is going to follow market rates. And that allows you to have very little price impact on the securities that you own. The second reason we do it is because you have principal interest payments that come in monthly, so they offer a significant amount of cash flow to the portfolio, whether you need it for liquidity purposes or just in the context of us being able to restructure the portfolio based on different market dynamics. We've always got cash coming back that allows us to do kind of some tweaks to the portfolio as needed. So that's really the core of the portfolio. All of it's U.S. government or agency quality, AAA portfolio, so that of the highest quality in terms of credit quality. When you look at the bottom of the page, we've got the performance breakdown. We do it a number of different ways. Just to give you a kind of a feel of how it works, we've got on the very left side, you'll see your average earned yield from a trailing 5-year period in relation to not only the 1-year treasury, but also the state pool. And you'll see you're over 1.5%, which nets you basically an average annual dollar yield if you calculate it based on an average dollar value in the portfolio of over $19,000 a year over the state pool. That is basically looking at just the income earned that you have in this portfolio. We also do this on a total return basis, so we do take pricing impact into account for the, if you see the average annual total returns there in the middle, you've got your year to date, the last 12 months, and then your since inception number. And what I would say here is we look at these numbers, certainly higher than the state pool by a significant margin. The 1-year treasury note index, we're trailing there for the most recent period. But part of the reason that happens is really when the Fed cut rates in March to 0, what they essentially did was pulled all of the future performance of the treasury index forward. They said, okay, the treasury index is yielding 1.5%. We're cutting that rate to basically 0 or 0 to 25. And all of that performance gets pulled forward. Then when you look going forward, which is kind of my view when I'm a portfolio manager, I've really got to look at the characteristics of the portfolio and what's that going to look like going forward. And that's really what you see on the far right there, your bond characteristics. You'll notice the biggest differential there is the yield to worst on your portfolio versus the 1-year treasury index, and then even versus the state pool, which is now around 50 basis points. The yield to worst is significantly higher. And that's really what we're trying to do, is drive your yield higher. That generates your investment income. And going forward, obviously, on total return basis, the 1-year treasury with a 16 basis point yield is going to have very little total return from here on out. There's really nowhere else to go unless we think we're going to get negative rates in the U.S., where you've got 130 yield, call it, in your portfolio. So that drives a significant amount of income going forward. And then the final metric there on the far right, effective duration, that's really our risk measure for the portfolio. It's your interest rate risk measure, and at 0.44, that really puts you kind of at the same metric of, call it, a 6-month CD in terms of interest rate risk. So very short, very conservative in nature, but yet still driving a higher return in terms of not only yield, but overall long-term periods of time, you're getting both yield and total return on this portfolio. Any questions on the performance before I turn to kind of our market and economic outlook?
Matt, you had mentioned negative interest rates in this country. Do you think we're ever going to get to that?
It's a great question, and it actually leads me into slide 5, which shows rates around the world. And you'll notice when you look at slide 5, there's a significant amount of red on there, which means all of those countries have negative rates. So to answer your question, do I think we go there? I think the Fed would like to not go there. I think Jerome Powell's been very clear that he does not want to have negative rates in the United States. They are seriously considering at the Fed doing some sort of yield curve management program, which would essentially allow them to buy or sell securities across the yield curve in whatever amount they need to maintain a rate. And if that is the case, and it's that the direction they go, I think you would not see negative yields. I think they would manipulate essentially the rate by buying or selling securities into the open market to keep it positive. That being said, obviously, when you look at this slide and you see the significant amount of countries that have negative rates, that is a deflationary symptom. That is showing you that asset prices are going down in those countries. And, essentially the market forced them there. None of these countries wanted to have negative rates either, but yet they had to go there. I think, without yield curve management, I think there would be a possibility that the U.S. would have to go there. It's one of those things where the Fed can say what they would like to see, but eventually the market's going to force them where they need to go if we were to have a deflationary system issue here in the United States. And the other side of it is, if you looked at even in March, and this happened back in the financial crisis as well, but in March we saw negative yields on the 3-month bill. It wasn't the policy rate. It wasn't the, the Fed taking the rates. They're the market traded 3-month T-bills at a -1 or -2 basis point for a couple of days there, kind of in the middle of the crisis. So it's not unheard of, but I think that their preference would be to keep rates positive in this country if they can.
Thank you.
When you look at kind of what happened with the yield curve, slide 6 shows you kind of the recap there. We put a number of different dates on here, if you will, of different time periods, but really what you need to know is if you start at that white dotted line at the top, that is the furthest back date we have. That's 12/30 of 2017, so that's year end 2017, and you see the yield curve was at a very healthy shape and at a healthy level. You had the front end of the curve over 1%. Treasuries were closing in on 3% on the long end. So everything you would want to see from a growing economy. And in a very short period of time, obviously, when we came all the way down to where we are now, you see the bottom blue line is May 11th of this year. You're basically sitting at zero from anywhere from overnight rates all the way out to close to 2-year treasuries are around 20 basis points. 30-year treasuries are barely over 1%, somewhere around 125, depending on the day you look at it. That is, while it's a positive sloping curve, it's not a good sign for the economy. Obviously, it's telling you there's no inflation in the system. Growth is going to be hard to come by. And, obviously the Fed has done everything they can to keep money cheap and available in this country to keep things moving along. And so that's what you're going to see. Hopefully, as we rebound and kind of come out of this coronavirus situation, rates start moving up. That would be a healthy sign, and also obviously be very, very healthy for your income going forward on your investments as well. I mentioned the Fed. This portfolio, because it's AAA rated and it's all government quality securities, the Fed really drives what happens in not only in the market, but in terms of performance for the portfolio. And when the Fed cut rates to zero, they basically forced the state pool to go to zero. And they have a very, very sharp mandate in terms of being able to dictate where rates go, certainly on the front end of the curve, and they've done that. And we listed here a number of the policy actions that they took, and they basically restarted everything they did in the financial crisis. So, they had money market facilities that were available. They started mortgage-backed facilities. They are now going to be buying munis and corporate bonds as well. And they've actually gone further this time and gone into buying high-yield corporate bonds as well, really as a liquidity measure to try to stabilize the markets. It's certainly worked. Obviously, the stock market has recovered significantly since then. Liquidity has become better since the kind of the last stages of March there. But from this standpoint, the thing I always want to tell our clients is when you look at this chart and you see the far right-hand side, the dotted line is showing you where the Fed funds futures market is basically pricing in Fed funds rates going forward. That's telling you the market is saying out to 2022, they expect rates to be at zero. So, from a budgeting standpoint, from an investment income standpoint, we've seen a lot of total return obviously pulled forward, but going forward, we're trying to make sure we're preparing our clients to understand that this is very much looking like what we saw coming out of the financial crisis, where it could be a multiple year period of very low rates, certainly in savings accounts and very short market instruments. So, as a portfolio management staff, we're looking at that. We're repositioning where we can, but it is something to be aware of. A couple more slides here real quick. I'll try to keep it brief. The Fed funds, and this is a chart of the Fed funds versus the 10-year treasury. Certainly we've seen a number of periods where that has become inverted, which is a negative sign for the economy. We saw it last year, and it started to kind of spook the market a little bit, kind of mid-year, which caused the Fed to cut rates in September and October. And then ultimately, obviously, coming into the coronavirus situation, rates were cut to zero. But we were seeing an economic sign here that was showing us that a slowdown was potentially coming, and it is held true again. And so, one of the things that we're looking for is to see that Fed funds rate and 10-year treasury spread widen, meaning the 10-year treasury goes higher. that would tell you that growth is coming through and inflation is coming back through. You know, the challenge is when you have the economic data that we're seeing, you know, today GDP was down 5% quarter over quarter, another 2.1 million unemployed for the week. You know, there are certainly serious economic overhangs that would hold rates lower for longer. And right now it's really becomes a matter of how quickly can we recover. We've all seen the damage that's happened to the economy. The question is, how quickly do we recover out of that? And unfortunately, I don't think anybody has that answer yet. I'll just hit the last couple points here and then take any questions. The unemployment rate here, you know, certainly we've seen the rate is up to close to 15%. The actual rate is higher than that. It's closer to 20, maybe slightly even higher than 20%, simply because people have dropped out of the workforce. And so just the math and the calculation of it, the rate actually even at 15% is low versus what it really is. The underemployment rate is close to 25%. So, you know, there is a significant job issue right now in the country. Hopefully, you know, it's temporary and it's due to kind of a mandated shutdown as opposed to an economic slowdown. If that really truly is the case, we should expect to see a rebound in the job claims in the third and fourth quarter of this year. And I think a lot of what happens with rates and with markets will be dictated by how quickly these economic indicators recover. The other one that really plays a point in this, and this is the kind of the last slide before I'll take questions, is really the inflation rate. You look at inflation, and typically the Fed would say 2% is their mandate. Now that the coronavirus situation's happened, they've actually come out and said they'd like to see it run higher than 2% for kind of an extended period of time before they adjust policy. But right now we're seeing rates, you know, on an inflation basis, anywhere between 1 and 1.5% roughly. You know, ex food and energy, you get to 170, and that's simply because groceries are more expensive now than they used to be. But at the end of the day, you know, we've got to see inflation pick up. That would drive rates higher, but that takes a healthy economy. And so, you know, we'll certainly watch this. At Dana, we're always watching this information and kind of repositioning portfolios. You know, right now, as I said, our expectation is lower rates for longer. So where we can find securities that are offering us significant yield advantages, whether they're, you know, the mortgage-backed securities in particular, they've been giving us rates close to 1.25. In this environment, that's close to the 30-year treasury. So we can get a security with the risk of a 6-month or 1-year CD with the rate of a 30-year treasury. I think that's a good trade. So that's kind of what we're looking to do right now, is continue to structure the portfolio with an understanding that we're likely to be in this scenario for at least the next couple of years. I guess any questions on that? The last couple of pages there are just your holdings in the portfolio.
Just a couple, back to the page 4, I guess it was.
Yep.
So the contribution withdrawals of 3,750, is that, what is that? Is that your fee?
That's the fee. Yep, that's the fee.
All right, that's what I thought. And on the next one over, so total portfolio income, 148,970. Is that an annual amount of income?
Yes, so the 148,970, yep, that's the annual amount based on the current coupons on the securities, correct. So you're basically running roughly $150,000 in income per year.
Okay. So we're gonna be able to keep it that way, or how much is it gonna drop, do you think?
I would expect it's going to drop from that period, from that level for the, you know, probably certainly next year. I would say in 2020 here, I think because of the way our securities are structured, the coupons, while they adjust, they don't adjust immediately. So we expect to have higher coupons for a little bit longer. Typically our reset would be anywhere between 6 and 12 months. So, you know, 2020 may be very similar to that. Once you start getting into, you know, the longer this goes, the lower rates are going to be. Ultimately, our coupon levels are going to adjust lower if we're in this environment for a significant period of time, you know, and then we can get to a scenario where, yeah, you're closer to 100,000 on this size of a portfolio. The nice thing about the securities that we use, they do have floors built into them in terms of their coupon level. So there is a lower level where eventually they kind of cap themselves out where they can't go any lower in terms of coupon. So, you know, there's an inability in these securities to go to zero. Even if we sit at zero rates for, the next 10 years, you're still going to have a coupon that's above zero, generating positive interest for the portfolio.
Good. And Josh, we leave this money in there. I mean, we never really need to access this money, really, right?
Correct. With the, we have, like, we like to keep, did you say it was like 20%? I like to try and have roughly 20% of our levy put away. That's by our policies, right?
Yeah.
And that's kind of what this is. So that's our ultimate, like, what if,
And, we've left this alone how many years now? I mean, it's been.
I've never withdrawn from it. I don't think Karen ever withdrew from it. We only added to it, so.
Okay, so it just.
And the portfolio started in 2002.
Okay.
I think the only time it was ever contemplated was during the last economic downturn.
Right. Karen did have us reserve cash in the portfolio and build liquidity as a just-in-case measure. I think we built up $1 million. But then when other funds came in from the state and it was seen that, the county could ride through that period, Matt reinvested those proceeds then.
So I don't know the exact timing of that, but I know delinquent taxes were a driver at the time.
Right.
Just due to our cash position, and obviously delinquencies and taxes are a drain on our liquidity. So I think we have the ability to adjust. I think the good news is for our current economic situation, obviously, we don't see those delinquencies, for a year or two down the road. So we'll be able to track that and make adjustments as necessary, just as we did during the last economic downturn.
Well, it's good to have options. Hopefully,
Right.
And this is one of them.
Right. And as Matt said, just the nature of this portfolio, the principal and interest payments come in monthly on most of these securities. So without Matt really selling anything or drastically changing the portfolio, he can build that liquidity in a money market fund within the assets as a just-in-case measure if funds would ever be needed. Of course, it detracts from performance a bit when that happens, but it should be a comfort that you've got that resource.
Absolutely.
Any other questions for Matt?
Any other questions from the committee? I guess we're okay. Thank you.
Great. Thank you for letting us join the meeting today. We would have liked to meet in person, and we look forward to that at some point in time, but nice to see that you are set up to hold these virtual meetings. And again, wish you all well in your position on this committee. And if ever you'd like us to come in and do another update, I myself am an Ozaukee County resident, very proud to work on your portfolio. So very easy for us to meet with you at the county.
Okay, fantastic. Thank you for the presentation.
Thank you.
Have a good day. Bye now.
Bye.
All right, I guess, Josh, we'll list all of our bonds that they purchased on our behalf. Do you know what that designation FN, FH, G2 means? Let's see, that would be page, I don't know what, 2965, under the mortgage bond. Where is that? I just wonder they use that as a descriptor. I think should mean something to it. And I don't know.
That, I feel like that might be just the, the identifiers there, I would have to ask them. It's probably just a short form description of the purchase that was created. So I can always ask them for that. That's.
You're right, it's probably, you think it's their internal.
Yes. I'll get some further detail from them, though. Let me just take a note on that.
For clients under a description, I would perhaps it might be meaningful to the client that's looking at it. If I were sending a report on what you own, oh geez, you got a bunch
G280 58.5s? What, I mean, and I don't care what those bonds are, but just curious. Okay, thank you. That's it.
Okay.
I'll take a note though, Supervisor Strom, and I'll ask them. What's up, Jay?
Thank you.
Yeah, it's likely just, yeah, short description of what the bond is, with the accompanying serial number next to it. But again, I will ask them because I will ask.
All right. All right, update on radio system replacement.
So we have, we have Dennis Buchholz, who is our project manager. We have Tim Romanelli, who is the members of the committee who were on previous term, probably recognized as a representative from Harris, who's the radio system. I think at a high level, we're on third base here. We recently finalized the final change order to purchase, or finalize the purchase, although we had purchased, but we finalized the numbers on the radios. We went through a lengthy process with specifically the fire service to attempt to get them the features and the things that they desired in their radios. And we will be getting radios into service within the next 4 to 6 weeks. So, with this, it'll be good to see it. We've been talking about this project for many, many, many years. It'll be good to see it come to completion. So with that, I think I'll turn things over to Dennis, our project manager, and he can give the committee a high-level overview. And I know Tim has a few discussion points too.
All right. Good morning, everyone. On January 23rd, you guys had invited us to your finance committee, and Tim and myself had showed up and briefed the group on the Justice Center situation and where we had some antennas installed with the wrong electronic downtail. So we had received those products, and new antennas had come in. And back about the second week of February, I escalated to Tim because we weren't getting a sense of urgency from our project manager. At that point in time, Tim escalated that over to a gentleman by the name of Rory Gledhill. Am I pronouncing that correct, Tim?
Yep, that's correct.
And Rory is the director of the Midwest market for project management, if you will. So Rory and myself have been in communications with Tim's meetings, and he's committed to the completing the site punch lists, getting the antennas established at Justice Center within the next 3 weeks or so. So in saying that, once that is completed, the next stage of for completion of the infrastructure will be the actual testing of the system to quantify it. The first 2 tests we'll be doing will be a DAQ test and a bit error rate test and an RSSI test. That's an automated test in which our vendor, General Communications, that does all of our local work, who is also contracted with Harris, will be drive testing all the areas in the county and getting us a end percentage number of what the 95% ratio will probably be greater than that. The other test we'll have to conduct will be a DAQ test, and that's where we physically go out and we drive the county and we do the "Can I hear you? Hello" test with the actual radio, push to talk into dispatch, and record our findings by usually saying Harvard sentences. And Harvard sentences, just to brief the committee because they're sort of goofy, is something of the effect of, I like tuna fish sandwich with ketchup. They make no sense. So that way you're repeating the thing and the dispatcher repeats it back, so you got good quality DAQ. That process will probably take about 3 weeks after the antennas are installed, and therefore we started working on the end user gear in parallel for change order 5. Tim will elaborate on that process, but just to let the committee know, we had met with fire chiefs, most of the fire chiefs, fire meetings, law enforcement, many folks as to their needs, wants, wish list, if you will. In that process, though, we went back to our original baseline, or our Bible in this case, which was the actual number of units that we would be supplying, which would assure that every individual firefighter, police officer would have the necessary equipment. and we have done that. One area at the time that was not addressed was the control stations, because it wasn't part of the original project, so that is not a piece of this final change order 5, just to make that clear to everyone. During that process also, we, Tim and myself, I wrote a scope of work. Harris wanted a scope of work written for their general contractor, which would be GCI, General Communications, Menominee Falls. Wrote a scope of work for them. We met, we agreed on all of the areas, and Rory confirmed this, the project management director confirmed that GCI has been basically issued the site management piece of that project, which would include warehousing of the equipment once it's all manufactured, the staging of equipment. During the staging, there's programming that will take place for all the individual agencies, plus all the pairings of the accessories for the equipment. Then they'll schedule with the end user for delivery of the equipment, complete the mobile installations, and then the most important piece for going forward would be the documentation and the warehousing warranty maintenance process. So we would have all the serial numbers recorded, who owns them, and how those units were functioned at the time of the birth certificate of the radio, when it was programmed, what its receiver sensitivity was, what its power out was. It would have all that documented. Just want to make sure I'm not forgetting anything here. The time frame should overlap roughly. If we've got about 3.5 to 4 weeks, depending on when those antennas are put up. If they're put up in the next 2 weeks, maybe 3 weeks additional for testing for final acceptance. At final acceptance, we'll have 1 additional payment required for the milestones, about 117K, and then we have fulfilled the contract with change order 5 in full. And at that, I'll turn it over to Tim so you could talk about the 20 revisions trying to fit budget monies into a usable force here.
Right. And this took some time. So first off, I'd like to say, I don't think I'm going to be able to get tuna fish and ketchup out of my head. That I've never heard that before.
Do you guys have frozen audio there?
Tim is frozen.
Yeah. Welcome to Maybe he's got to redial in. Shall I try texting him or?
Yeah, maybe shoot him a text. He may have to drop off and join back.
All right. Let me text him here. Apologize for my weird environment here. My wife is downstairs teaching on Zoom, which is a real pain to work and have a teacher in the background. Okay, he should be coming back. Think they need some cell towers in Chicago. Well, until Tim joins, I'll sort of go through what I know and what we did. We basically had so much monies to deal with, about $4 million to close out the contract, which was the firm fixed pricing for all of the end user gear identified in the numbers from the first contract. And what we did is when we went through all of the different fire meetings and that, we put together the wish list that some of the gentlemen were jockeying for, more of a wants versus a needs assessment for a radio replacement program. So as we did that, the numbers had escalated in the fire services and a couple other areas, which caused an enormous increase, which would have been a huge change order, which we would have blasted through the budget. So Tim had to go back to his management and get us several. Oh, he's I see his snowman coming back.
Am I back?
You're back, brother.
Okay. I don't know what happened there. It just, all of a sudden, my screen just went white. Sorry about that. So I was mid-sentence. We set up demo days. We had, people look at radios. Dennis and I traveled around from station to station. And what became apparent to the fire service was there were essential things that they needed to do their jobs safely and effectively. And my job is not to question those needs, right? My question is simply to have that table and explain the technology, and they deemed what they felt were essential things. Unfortunately, those essential things drove up the cost per radio on the fire side dramatically. Different microphones that they utilize, different antennas, different features on the radios. That drove up the cost dramatically. So when we went back and we added all of this up, it was significantally better than what the original contract was. And when we sat down with Jason, started off the negotiation and never moved from this point. He said, there is no circumstance under which we go back and get more money. The contract is what the contract is, and the budget is what it is, so solve the problem. So that has taken a great deal of effort between Dennis and myself, and Sean and Jason, and being in the field and going back over these numbers and looking at all the things that were deemed essential, and re-auditing the numbers and sometimes trading things back and forth. It took 19 iterations of the total purchase package to get where we are now. And really the last few steps of that was really me going back to Harris and saying, look, we kind of rushed this initially. We didn't do enough due diligence as a vendor. And I think we need to absorb some cost on this, which was not insignificant. It was a couple $1 million in what would have been, and I'm not pleading my case here that we're losing money, but it was certainly a profitable business that we had to say, you know what, we didn't communicate, we didn't really do due diligence with a partner, being Ozaukee, and figure out these things ahead of time. I got our business to buy into that and to forego that. So again, it was an awful lot of work over the last 3 months to figure out just the right essential package that had the features that fire needed, that fulfilled that promise that was the radio replacement project, that everyone that carries a radio today is going to get a new radio to carry tomorrow. So that was the goal. And again, after a lot of, a very, very close partnership working, we solved it and got it in under the budget number, and succeeded in giving, everyone will get a new radio out of the project.
Thank you for that. I commend you for getting that done, and Jason for that direction he gave you. I wholeheartedly agree with that. And the bottom line is that the essential package that our fire and our people got what they needed, right, to get their job done.
That's absolutely. So our choice was either, you have to do one or the other, and you can't do one or the other. Either you reduce the number of radios or you reduce the number of features. And if a fireman says that these features are essential for me to do my, life-saving and life-threatening work, none of us are in a position to question that. So we could not do that. We had to figure out a way of getting it under the budget without sacrificing either. Everyone gets a new radio and fire gets those essential services.
Okay, great. Questions? So the testing I was going to ask about. So Dennis explained some of the testing issues. So we had that problem with the timing with the trees and all that. We've got all that figured out now as far as testing.
Yeah, once those antennas are put up with the proper electronic down tilt, the DAQ and bit error rate test is like 3 big pieces of equipment that is put into a general communications vehicle, and they drive and they see the baseline noise floor, And that testing will give us our end result of 95% coverage portable at the hip. So that testing generally, I'm being conservative here. I'm saying 2 weeks, probably be done in a week and a day or so, 6-7 days. And then the DAQ testing at that one area where we failed, we'll go in there and test. So once that testing's completed, we are at system acceptance. At the point of system acceptance, we'll issue our final payment for the final milestone of $117K. And at that point, the system is Ozaukee counties, and then we got to wait for general communications and the radios to be prepped, programmed, baselined, and then issued. And the mobile installation process, just so everyone's aware, that mobile installation process will take several months after the fact. But the plan is to get the portables in everybody's hand, get them on the new system, because recently we've had some, well, for many years there's been problems in certain areas, Mequon down south, for certain coverage areas and whatnot, certain areas in Cedarburg. So the important thing is to get the portables in everybody's hands. So we're working on the new P25 linear system, which will give much better coverage, and then we'll put the mobiles in as GCI schedules them and do the quality assurance checks and things of that nature over the next several months.
So portables are the ones on the person, the mobiles are in-vehicle radios, just for new members here.
My question is, are these radios, if a fireman has it and walks into a building, is this radio going to be effective inside a building?
Yes, that's what the coverage test ferrets out. And a coverage test basically simulates, as we're out there, we got a 12 dB at, well, I think on this project it's a 9 dB attenuation for the 800 megahertz that simulates. You're actually driving down the signal coming into the radio by an attenuator, an electronic device you put between the antenna and the portable, which simulates a typical style dB level of a building.
One of the big drivers for this project from the very beginning was exactly what you just said. The system that was operating now, the radios that they have now, do not work very well inside buildings. And as you can imagine, to a fireman, that is extremely important. So that was one of the big drivers of going to this new system and new technology. So yes, it will provide much better performance in buildings, in those kind of critical environments where they operate.
Would that work, say, even in a cement block building?
Depending on the dB level of the building, there are going to be some buildings in Cedarburg that are older that are like Faraday cages. They're made with all sorts of cement, and the way you would test that building is you would do a receiver test on the outside of the building and then go in the building and see what the penetration level is. That's where you get the dB level. The contract specifically calls out that dB level. So anything greater than that, like in the other county we worked on, Washington, there is a, I forget the name of the insurance company in West Bend. It might be West Bend Mutual, I can't remember. But that building was constructed to take an EF4 tornado. Even with the latest, greatest technology, radios weren't getting out of that building with the exception of putting in what they call a bi-directional amplification system. So it's dependent on the building. That's why the contract calls out a certain dB level. But typical residential buildings and things of that nature, not a problem. Typical storefronts, Tim, you want to elaborate on that?
Yeah, so there's different ways of thinking it. When we talk about 12 dB, what it is every building has amount of loss, and what's meant by that is the amount of the radio waves aren't going to penetrate into the building. So when we design something, we use parameters that say for this type of construction, the radio is going to perform very well. There's also a difference in technology from the VHF system that was operating before and what is being used now.
They got 800. They had EDAX before. 800
EDAX. Okay. Yeah. So the P25 is a linear simulcast. Will operate better in buildings, even at the same power level. So there'll be an improvement, and that will be across by this threshold. And so So, are there buildings or basements where it won't work? And like you said, concrete buildings, certainly. But you can also keep spending money until you're you're out of it to achieve that. You try to build the best system that has the best balance of it to provide the best coverage in the most buildings.
Thank you for that answer. The reason I ask is because we were told that we had to wait for the leaves to be on the tree to be able to test the radios. And I was thinking, well, if the radio wave won't go through a leaf on a tree, then how could it possibly get into a building?
No, you're talking about a full foliage situation, and that's just typical testing on every job I've been for the last 20 years. You want to have as much obstruction out there when you test the system. So all contracts are always wrote with a full foliage.
I think of it I think of it as that, if y'all remember the famous words of Ronald Reagan, trust but verify. So we have models that say it's going to perform just as, and these models are very, very accurate. But what we do before a customer signs off and gives us that final payment, we verify it. And so the full foliage is part of that verification process. We want to know what the signal strength is at the edge of the county with full foliage in between. It's just a matter of trust and verify. That's the right way to do it.
Okay, thank you.
Even up in Belgium, you gotta have coverage.
Historically, it's been a tough area down by Arrington Beach.
Right.
We did put an antenna on that new state tower there, so that, hopefully that will resolve many of the issues there. We have a similar situation on the southern end of the county too, in Mequon, Vermont Park and south, where topography and the lake present some other challenges. So, that's an area that we'll have to focus on in the future. We may have to put some equipment on potentially a tower in Bayside or something to assist with radio coverage in that area. But we do know that when the new system goes live, we believe it should by itself improve coverage, but we want to make sure and test that. So we've been working closely with the Mequon Police Department to deal with some of the coverage issues that they've had.
Yeah, I didn't know about the or Belgium probably didn't know about the next one.
Yeah, both ends of the county have coverage issues near the lake.
All right, any other questions for? All right, I guess that's it. Thank you for the report, for the update.
You're very welcome.
Thank you.
All right. I have a question for Jason. Okay, about the radio still? Okay, thanks. Go ahead.
They don't need to be here.
Okay, thanks, Dennis. I guess we're all good then.
All right, you guys all have a good week. Be safe and be blessed.
Thank you.
Okay.
Bye.
All right, Supervisor.
Well, I was just wondering why we didn't discover what the fire department's needs were when we did the survey.
We didn't have time. It's that simple. The offer to purchase the radios, I believe you may have been on the board then, it necessitated a special meeting. Yeah. That came in 2 weeks. So that we went from mid-month June to sign a contract by the end of the month to receive this deal. So we didn't have the time to do it. It just was not, that's it. It's that simple.
What did we end up with for the number of radios being purchased versus the estimate when we kind of started?
They're very close. They're very close. A lot of the larger, especially in the fire service, some of the larger departments went down, but some of the smaller departments increased, just because they used a national fire formula to determine the safe number of radios that they need on their equipment. And I think the Wabacas and the Belgiums and Fredonias of the county and Thiensville, they didn't have enough radios under that formula, but some of the larger departments were able to decrease. So that it worked out pretty well, but Harris stepped up and worked through that issue that I think you identified was, you know, we were forced to make a quick decision, so that we were able to do that and obviously and delivered on, well, within budget.
And I think we'll spend every penny, but we won't spend one penny more. He made the point 2 or 3 times that the new radios were significantly more expensive than what we had originally spec'd. So I think that's a nice job on your behalf to, you know, I don't know, negotiate with them.
It was some tough negotiating, but even, you know, if you remember, the vendor stepped, because of the antenna issue that was identified, the vendor did step up and they put additional programming in the radio, which by itself was, I think it was a $1 million item that, you know, they had to step up and resolve because of the antenna issue that we had at the Justice Center. So they've, you know, it's been a good partnership with them.
A good Yelp review.
Yes. Yes.
Well, thank you for holding the line on that, but, I mean, but we did have a contract too, so you held the line, I mean, so they needed to.
I think we have, but part of the issue was some of these things were not necessarily in the contract or maybe in a little bit of a gray area, you know, so, but yeah, but they were, it was we worked together versus, you know, in an adversarial way, which generally, I think, works.
Hopefully better, right?
Hopefully better, correct.
So, yeah, and the number of radios, yeah, that was always a concern, you know, because of the fact that the, you know, skin in the game kind of idea with the departments and everything. So, but can we get a number, like, I remember we saw the list of numbers of where they all were allocated.
Yeah, I think what we'll do is, we'll do a full report out, sort of a post-mortem, once we.
Maybe, I mean, on that report too, it'd be nice if, I guess, curious what radios they all have now in this new contract and what they had before.
Right. Yeah.
Because, yeah, I know that, well, we've spoken, Chief Rice came in and he obviously has, like, the comments Tim made about what they wanted versus what they, you know.
Wants versus needs.
Well, it's difficult, you know, like you said, the fire, you know, we don't know the fire business and what's important and what's.
Well, I do.
You do, yeah, but anyway, whether it's, you know, like the Cadillac plan or the what you need plan kind of thing, so I think that was.
So I think we were able to deliver them by and large everything that they wanted with a few exceptions. You know, so you know, it's not like leather heated seats, but you know, it's a high visibility, water resistant microphone that functions well under wet conditions, or you know, intrinsically safe batteries that don't cause sparks when you're in an environment that might be filled with natural gas or some other. So I mean, yeah.
Well, that's good to give, you know, the proper, you know, the real good quality stuff, but then the number too, like, okay, we need them, but, well, why don't we have a few extra just in case kind of idea. So that's what I'm glad we, you know, kept the, kind of a lid on some of that, so. All right. So we'll get more information in the final time. Right? Any other questions about the radios? All right, update on fiscal impact of COVID-19 pandemic on the county.
So I think at a high level, I would say this. 2020, we anticipate that we will be able to be in a good fiscal position. You know, all signs, you know, point to us being able to weather the storm, if you will. We have reserves. We've planned for this. We've done it over a number of years to make sure that we have ample reserves in our general fund as well as departmental reserves in areas that will be hit. LaSada is stable. They've received some additional payments. I think the challenge that the county will see will be in 2021, and that will be a budgetary challenge. that will flow down from the state of Wisconsin and potentially impact our operations as we move forward. So I think any of our best efforts now will help that, but again, the big challenge will be in 2021. So again, we're early on here. We don't know exactly where things will stand in terms of sales tax. We do have some indication. We did receive our March sales tax, which was below last March, but last March was our best March ever. So it's hard to, there's not necessarily a month-to-month, apples-to-apples comparison that we can do. We do know we're about $60,000 over last year's budget as of right now through 3 months collections. At the end of June, we'll have a really good idea of what the impact was in April. So that that's a big area. Our fund balances are healthy. We've set money aside, we've set policies and put them in place to help us address things like this. We were able to address the financial issues at Lasada, because we were prudent in the way that we handle our monies at the county. We anticipate the same here. So our fund balances will increase at the end of 2019. So again, we're in a good position. Remember, we took some money out of our savings account to do the roof at the Justice Center as well as the War Memorial. So kind of the way that those assigned and unassigned numbers shift around, that actually frees up some additional funding for us. So again, 2020, we're confident we'll be able to meet the challenge. Our public health department has a significant fund balance. We have a strong fund balance in our general fund that can certainly assist any challenge that we might see at Lasada. Sales tax estimates, there's certainly different scenarios that the Wisconsin Counties Association has put forth, as well as some other financial folks that we work with. Sort of we use a 7, a 15, and a 20% drop, and I think we'll have a better idea at the end of next month of where we sit. But again, our fund balance is well positioned to handle decreases in the sales tax. We have asked that all departments, stop any non-critical spending. We've put on hold our capital project funding. So that in it by itself would solve the issue with a 7% drop in sales tax collections through the end of the year. So we've made some decisions to put ourselves in a strong financial place to deal with that. We've talked about a hiring freeze for non-essential positions. That's something that we were working through. We haven't put one in place countywide. There's certain areas where we have to hire. We have to hire at our sheriff's department. We have to hire at Lasada. There's certain areas where a hiring freeze isn't necessarily as helpful, because in human services, for example, our social work positions are largely funded by state revenue streams that are based on requirements that we need to fill to keep those revenue streams flowing. But what myself and the HR director are doing, we always look at every position when it comes open. And I think now we're sort of asking some additional questions in terms of, what does it mean if we don't fill this position for 3 months? What if we hold it off for 6 months? What are the ramifications of that? So we're really trying to look strategically on a case by case basis, and there hasn't been a lot of hiring going on outside of Lasada. I think is outside of the nursing home. It's always a big area where we're recruiting, and it continues to be one. But in general, there hasn't been a lot of openings within the county workforce. We're tracking everything we can in terms of COVID expenses. We do know that all COVID expenses will be reimbursable from FEMA at least a 75% level. The state of Wisconsin will lay another 12.5% on top of that 75%, and as of now, they've committed to make up the additional 12.5%, which would bring us to 100% reimbursement level. So we're asking every employee who's working on COVID to track their time. We also have employees who've been off of work and unable to work. Those expenses would be reimbursable, so we're having them track their time as well accordingly. So we've had about $500,000 in wages that have been spent in wages and overtime since the beginning of the pandemic, and we do anticipate that the majority of those will be reimbursed. In fact, just yesterday, the governor announced a $200 million grant program to sort of begin the process of reimbursement. So we'll,
Jason, just to play off of that, through the Towns Association, there's 1,250 towns in the state. Paul, you're like me, you wear a couple hats. Each town will get a minimum of $5,000.
every government in the state of Wisconsin is guaranteed at least $5,000.
Not big money, but it's something.
Capital Reserve Fund, again, we put that on hold. We were poised to bring those projects to the board in April of this year. Things changed significantly in March, and we will not be taking on any significant capital spending. For now, I think we'll have to discuss what the approach is with the Interurban Trail grant, and we'll talk about that internally and talk about that with the Natural Resources Committee and come back to this committee with ultimately a recommendation there. But that will come in time. As I understand, I've reached out to the state of Wisconsin. I've reached out to Representative Brooks' office. The DOT is planning to move forward with that grant program.
Well, that's what it stood out. We talked about it a little bit earlier, but that would be one that would stay in the capital project.
Yeah. So I know that at the state level, they've put forth some recommendations on reducing spending. Obviously, their fiscal year ends June 30, so they don't have a lot of time, I think, to make significant adjustments within this fiscal year. So I think the next biennial budget process I think it'll be a challenge at the state level. Unfortunately for the county, those challenges generally flow down to the county level. Although many of our programs, from the state, and they set the requirements, and the spending isn't necessarily discretionary. Again, our departmental reserves are in good shape. Our highway reserves are healthy. Our human services reserves are healthy. Our public health department has a healthy fund balance. So, over the next 6 to 12 months, we're confident we'll be able to deal with the fiscal challenges that lie ahead. My feeling is that we won't know the full fallout of this, for 12 to 18 to maybe 24 months. So, I think as a county, we tend to think in 12-month budgetary increments, and I think we're going to have to force ourselves to think, a little bit longer than our normal fiscal year. But again, high level, unless something changes dramatically, with sales taxes within some other areas in the next coming months, I think we're in a great position in 2020. 2021 budget will be a challenge similar to those that we saw in the last economic downturn. So, I don't know if
I think, like you said, the word prudent, and I think that's something that the county has done well on over the years. That we've been careful and fiscally conservative, and at times like this, really happy that we are that.
We work to position ourselves to deal with, at least financially, to deal with these challenges, and I think we're, with the work of our treasurer, with the work of our finance department, we've been able to do that. So.
I'm sorry, just one quick thing though. So the sales tax, so they predict whatever the group is again, that we're going to be about 14% drop. That's what's predicted right now, or about.
I think that's the middle.
1.3. Yeah, about the middle part, right? What the WCA expects at the moment. Okay, and and that would be the main, as of now, if that comes to pass, that would be the main reduction in
the general fund.
We should be reimbursed on the COVID related stuff.
I think the other thing, Paul, to look at would be the fuel tax collection. I think the numbers are in for April, it was down about a third from year previous to now. So, I mean, that, you know, and they go, well, they gotta give you what you're allotted. They don't have to do anything, you know, so.
Well, what is that?
Counties and municipalities, I think, have to be prepared, make the assumption, you're gonna take less. You're gonna have less money to maintain your roads.
Yeah, I think that's probably,
What's an estimate of that hit on the?
you know, I was on a call with, the Secretary of Transportation, and I think they're in a similar position, although I think the challenge for them is that their budget planning is coming up a little quicker than ours, but yeah, obviously they're not, the state of Wisconsin isn't making any commitments to anything except to say that, you know, for this fiscal year, projects should proceed as planned. But yeah, I think fuel tax drives some of the transportation revenues. So I think we can likely anticipate some of that, potentially reduction there.
Supervisor Trump.
You talked about the impact on employee timesheets. The sheriff's office has traditionally had a lot of overtime. Has that been steady, change, drop, increase?
It actually, well, you know, they were able to implement some new work schedules at the front end of the pandemic under when the statewide state of emergency was in place, and they were actually able to reduce some of their overtime spending because of what they were able to do. When that ended, they lost the ability under their union contract for some of that flexibility, so they've reverted back to their normal work schedules. But I don't think, you know, there's nothing that is eye-catching with overtime. In public health, certainly, right? There's been significant expenses in public health, and you know that's about 40 employees. Losada has seen some increases in costs, but they've received some pretty significant reimbursements from the federal government to deal with what they've been working through.
I also think, Justin, because of the pandemic with the inmates leaving the jail, that did ease. When Paul and I were on public safety, that was a big deal of their overtime, was always the jail. Well, the jail emptied out, so that the overtime kind of goes away too.
Jail emptying out, how many people were let go or?
I don't know. Yeah, they released their Hubers at the beginning of the pandemic, and they're actually I think they've reported back now, or they're working through that process with the judiciary.
So, question on Losada. So, as far as people there, residents, so that's down, right?
Yeah, they're at historic lows. They're at about 95.
So I could see that being a possible ongoing issue for maybe some time, right? I mean, people are going to be maybe as anxious to have their loved ones at a nursing home.
Yeah, potentially. I think the other side of that is, you know, the moneymaker, if you will, at Losada is those rehabilitation rooms. So as things begin to ramp up in the medical system, there will be, you know, there's certainly, I think, a backlog of knee replacements and hip replacements and things that haven't occurred over the last 3 months. You know, so as things begin to open up, you know, there will be a significant need for those rehab services, and that's certainly an area where Losada has been continually improving over the last 3 or 4 years since the upgrades.
No, that's a good idea for that. Yeah.
So I think that there's certainly some light at the end of the tunnel there as we return to normalcy in the medical system and how that works through at the nursing home level.
As far as like the code related employees' time being reimbursed, so is that all time that was new things that were done, or let's say a person's working 40 hours for us, and we're going to pay them 40 hours pre-COVID, right? And now they're working 40 hours, but half their time goes to COVID. So if we're being reimbursed for half their wages on that, right? So is there any where our budget would be improved because we're actually getting reimbursed for money we would have been paying for anyway?
Well, the only thing I could say is, with the information that the governor released yesterday, the only thing that's reimbursable is extra expenses, which I think is pretty.
That's fair. I mean, I just, you know,
I think even
a private business person, if you're thinking of the other part of it.
So I think even at the beginning of this, as Jay and I talked, you know, in terms of where we're situated in our budget, you know, we've established a budget for 2020. Those monies are in the budget. The expenses are, you know, the expenses are set. So, you know, we didn't see a significant challenge countywide on that, except in some areas where, you know, like Lasada, where it's more revenue dependent.
Yeah, so our expenses are pretty much in line, and we're just worrying about some of the revenues.
Right. So we will, but like I said, we've worked hard to track every COVID-related expense, and we put those measures in place, you know, very early. So
yeah,
we want to maximize any reimbursements that become available. You know, none of the funds that are in the current CARES Act or and under the control of the governor now can be used for revenue losses at local government levels. There was a bill passed in the House that addressed that. I think it was gobbed up with many other things. Right. So from what I understand in our discussions with the Wisconsin Counties Association and their discussions with the National Counties Association, that House bill is not going anywhere.
Yeah, it's a political statement.
But I think there has been some recognition in the Senate and the White House, who initially said, no, we won't address revenue losses for local governments. They're at least beginning to warm to the idea that, you know, it's really, you know, I think that's a challenge. It's certainly the challenge at the state level. You know, it's a challenge for us in some areas, primarily sales tax. But I think, you know, on a call this week, we think there might be some continued discussions on how that plays out over time. So
yeah, that's what I've read too. There might be something there, some compromise maybe.
That'd be great.
I like the idea that what you said though about if we're at the 7% drop in sales tax, then our capital reserve fund sort of covers that. So that I think is a good way.
I think we've identified that as a way to fund any significant sales tax collection reduction. It seems to be we're trying to do the easy things now, so we don't have to do hard things later. And I think that seems to be a pretty easy thing to do.
And so all these capital projects, but if we put them on hold now, I mean, like a year from now, say we still haven't done them, we would have to go through a process of getting them back in the new program we have for doing these kind of things. Well, especially the compensation study. I mean, that should be on hold indefinitely, I guess.
That will be permanently on hold until we know what the economy looks like. And yeah, I don't envision a way that Ozaukee County can do a compensation study when unemployment is between 15 and 20%, you know, nationwide. Okay. I think it's unfortunate. I think, you know, and we talked about this. I've talked about this with a number of department heads. You know, the economy was good. We had some great things lined up, you know, for 2020 and 2021, and we were thinking, you know, we had done some significant work on those items. I think this event changes all that significantly. So we'll have to revisit all of those things, and you know, probably deal with things more on a case-by-case basis. But yeah, I don't envision a compensation study occurring. Yeah. Now, you know, can we think creatively about, you know, doing some things internally? I think we'll have that conversation coming up, but you know, now is not
Certainly now, not
down the road.
I can tell you, my wife works for Kohler, and I can tell you what the bonuses or the increases were. Zero.
Yeah, that all changed, right?
26,000 people worldwide.
Right. I mean, employee engagement study too, same deal. Right? So.
Yeah, this will, and we'll probably get into this as we talk about reopening this building and what that looks like. It's gonna fundamentally change the way that the county works. And it's that simple. So we have to figure out what that looks like. So,
Going around.
yeah, we're not alone.
Any other questions about the topic? All right. Speaking of, right, to reopening of county.
Right. So I think, obviously this building has been closed for a number of months. And we have a number of department heads that work in this building as well. And I think my first and my primary question to them has always been, how do we deliver service to the people that need it? And in anticipation of this discussion, I might poll them again. And I'd ask any of them to chime in. I think the general feeling is, I don't know that there's been one complaint from the public. I think had there been, we would, we may have shifted our position a little bit. But across the board, the departments in this building have been able to deliver service to the public by appointment. So, we feel like there's some flexibility there. Our public health officer has recommended that we keep this building closed until about the middle of June. We know that I think almost every local government is closed in Ozaukee County, and some of them, I think the city of Fort is opening June 1, what may have been their tentative plan. Village of Grafton is, in a similar time frame. So I don't know if any of the department heads that, other than we've been able to keep the lights off and there's not as many people in the building, I think by and large, things have functioned very well. I know Josh has, we went through some tax payments and things. I don't know if you want to update the committee on how that's worked for your department.
So basically, with everything being shut down, I put notices up on all the windows, put some news out there to just make the tax payments to our Dropbox by mail or online. We have all that capability, but then if they really did want to come in, then we would accommodate by appointment. So I have had a few takers on that, and they come in and see me, and it's mostly people who just wanted their receipt right away, so that didn't want to pay the self-addressed stamp envelope. So, and that's fine. It's largely worked just fine. I've had no complaints as far as how the department functions, so over this time period.
Are you the only one in the office usually, right?
I have started to bring my staff back and doing my clerk back on their normal hours at the time. My deputy is working remotely. I thought that best in case I end up getting sick and I have to quarantine, then she can come back. So, but I thought that was best. So I did run that solo from the day of the pandemic until the very beginning of May.
Marriage licenses, obviously passports have been put on hold for.
Right, passports have been on hold.
I think you've had a pretty good process moving forward.
It's kind of, it gets to be a little busy now, and we've been doing appointments, and I also have been issuing the licenses on the spot. There's a waiver fee involved when you issue them under 5 days, which is at the discretion of the clerk. And in this case, so that they didn't have to come back, I've been waiving that fee and issuing them right away. So that, it's worked out really well. I've been kind of liking the appointment thing.
HR, I mean.
Yeah, I have two staff members, they're both working 100% remotely, and there's nothing we can't do remotely. We've had no problems for issues.
Finances, do you have staff in and out to AP and things? But our payroll manager hasn't been in the building for 8 weeks or more. Yeah. So. So our tentative plan is to open to the public, and we haven't finalized a date, but I think we'd like to open for a limited number of hours per day, just to kind of gauge and see what the traffic is. We were waiting, you know, it was 2 weeks yesterday from the end of the safer at home order, so we wanted to see what the impact was in terms of numbers. I think yesterday the public health officers did say that we had 30 new cases overnight, so, but that was also a backlog of the holiday weekend, so.
Got a lot more testing going on.
Correct. So, yeah, that's sort of the update of where we are in terms of
You know, so when
I don't know if you have heard anything from the public.
No. Just we try to get in and we,
You don't have your badge.
Yeah, well, I think we need to get you off.
it worked out well. We ran, you know, they should let us in there.
Bob in here.
So
does that badge open the door?
Yours does not.
Yours does not, because you haven't been set up for that.
So I could, my wife has to log on when she works online. So do employees need to, some or all of them have to log on to be like punched in?
So what we initially asked every department to do was develop a plan for telework. They did that, you know, and they set some expectations and requirements. Now we're formalizing that, so we're developing individual agreements between managers and employers, because, you know, I think even if the building was open, telework is here, right? And it's an effective way to keep people out of the building, frankly. So we're going to continue to use that. So I know Chris in HR has been working with all the departments to formalize telework agreements, and I don't know how many we had in place. We had a bit of an informal process at the beginning of it, where we just asked for emails and documentation of what they were doing. Now we have an actual agreement where the manager and the employee sign, so that there's a collective understanding of expectations going forward.
Yeah. A good plan to get it more formal.
Yeah, I think we want to make sure that both the employee and the manager are on the same page, so that we don't run into the, well, I didn't quite understand, and, you know, all those things that cause HR to have issues can quite often be headed off with some good documentation on the front end. So we're working to do that. You know, we only have a handful of employees in this building who are really unable to telework. You know, some clerical and reception positions. A lot of them have been trained and are working with our public health department to do contact tracing. So we're sort of reallocating resources within this building to support the efforts of public health.
And there were no problems with anyone having access to laptop or internet or anything like that?
Well, you know, a lot of times departments don't purchase laptop computers because, you know, there's a price difference. You know, it's a $300 price difference between a desktop or a laptop computer. I think going forward, we're gonna urge people to think hard about allowing our workforce to become mobile. But I know I can use HR as an example, where they had desktop computers. We just had them take that entire unit home and hook it up at home.
Okay, good. Yes, that's what I was wondering about, right?
And the other piece is on the IT side is we've been working with our vendor to enhance that security for people working, because at home you're just on your Wi-Fi, and, you know, we want to make sure that environment is secure, so that when you do bring your equipment back into the building, you know, it doesn't have something festering on your hard drive that can cause us issues on the IT side. So, you know, there's a lot of many considerations that go along with telework, but again, we've had pretty strong success in having people work from home.
Well, like I said, I think it's, at least it's gonna be increased. Anything else on the reopening then? So we're still, there's no date then, we're just still looking at.
Yeah. I think if there's any input, what I told our department heads in this building, if there's any input from the committee, we'll take that, we'll loop back and finalize a plan. So if there is any input from the committee, I'm glad to take it.
Well, so far, I guess, still good. I mean, I think, you know, yeah. And it kind of dovetails into the whole security thing we were talking about anyway, right? So this, I mean, we were talking about.
Yeah, we're in the midst of a process to enhance the security in this building. I would say it hasn't been more secure than it is right now. I did see the vendors here yesterday, so that process is moving forward, and Joe is overseeing that. But for the new committee members, you know, what we talked about is identifying the main entrance as a public entrance, and then basically requiring all employees to fob in and out of every other door, because historically every door had been open, and you know, when we went through a security analysis with our sheriff's department, they identified that as a pretty significant security risk for employees. And unfortunately, you know, that's the world we're in.
Talking about our mail system, seems like on the county mail, I'm getting, you know, 80% of what I'm getting, I'm just deleting it.
Yeah.
All kinds of, all this stuff.
It's incredible. It's incredible.
It used to be that way, but it's
Right.
reversed.
Yeah. So I can see maybe if there's a way to tighten up the spam filter for the county board addresses.
Yeah, that's good. I noticed that this morning too.
Oh, dude, it's just a tip of the iceberg, believe me. People are working to, you know, find any niche they can right now. So, yeah, I'll talk with our network administrators. You comes from outside the organization, yeah. Yep.
Other than FEMA and a few other things, I mean, what?
All right, thank you.
Yep.
Reports, county clerk?
The only thing I'll say about my department is I have Lisa working remotely. She's the only one that can work remotely. The other two are non-essential. You know, their duties involve the switchboard and the mail and that sort of thing. It's a little different for us because we, you know, don't have that option to have that area closed. There's some things to work out through that. But other than that, once the elections kick in, which should be next week, then, you know, Lisa will be coming back and we'll be going forward with that. Does anybody have any questions on my annual report that was?
Oh, no, I'm sorry.
Or on anything?
How is the mailing of absentee ballots going to change expenses in your department, if at all?
That's with the municipality. The larger municipalities, they purchase all their envelopes that way. I shouldn't say that. It will increase our cost for the ballots, because before we did like a split depending on whether we used an absentee ballot. If you're familiar with those, they all have that, they're all marked to fold. And so there's a little price difference, but we're going to be going 100% with the absentees type of style of ballot. So in case that's how it goes or whatever, but it's a minor impact to us, and we're reimbursed for any envelopes that the smaller municipalities, we order for them and they reimburse us.
Finance.
I have a question about the general fund budget grants project management financials. Would you refresh me on what that is? Well, I don't know.
So that is the, that's the budget office of the county. That's the budget for the budget office. Chad and Jason, yeah. Mhm.
Yeah, thank you. That's good.
All same old, pretty much. Except for the audit.
Money in, money out.
Not quite as much money going in, maybe, it'll take the same amount of time for you. All right. Thank you. Resources.
Good morning. So yeah, it's been a busy time for human resources with COVID, making sure we're compliant with, the federal Coronavirus Response Act, trying to prepare reopening the administration center, all the various questions coming from departments. I have an employee who traveled here, they were in contact with this person. So it's been a busy time, but we also have had time to work on some other non-corona related projects. So just a few things going on in HR. So one thing I've been wanting to do for some time is to go paperless with our employee onboarding and personnel files. I looked into some vendors a few years ago, and they were all about $20,000 per year to give us the ability to do that. At the time, I wasn't interested in spending that type of money for our personnel files. Then about a year ago, our finance department entered a contract with a company called DocuWare to make their AP process go paperless, and this company also has the ability to help us go paperless with our personnel and onboarding files. So for just a small setup fee, we're able to go paperless for no additional cost, which is really going to help us in our ability to do telework as well. So we are currently in the process of kicking that off. So I've been working with the department heads here, as well as Justice Center and LaSada as well, to see if we can go paperless in all those areas for personnel files. So that's a nice project going forward. I'm working with our insurance broker. We have open enrollment each year. Typically starts around November. So we're looking at a few vendors that potentially going paperless with that process out as well. And if we were to go that route, it'd probably be a low cost and no cost initiative. There's some sort of arrangements we could potentially work out with vendors to do that. One thing that we do for our various departments is pre-employment physicals and drug screens. Each department has a different process based on the type of position. LaSada, they have certain exams and, TB testing, drug testing. Sheriff's Office has some of their own processes as well as the admin center and parks. Everyone has their own process. But I'm working with Aurora and Group Health Trust to see if, so currently how we have those done is we have just different various vendors. If we have a new hire at LaSada, we'll send them to a vendor, and they'll do the pre-employment physical and drug screens for a cost. So we are looking to see if Group Health Trust would be open to us potentially completing some of those there at the clinic, which would be a cost savings for the county overall. So So I've been working with Aurora and our departments to kind of lay out exactly what we do by each department. And then Aurora's working with Group Health Trust to see if they're open to allow us to do that there, which would, potentially be about $10,000 a year savings to the county if Group Health Trust is open to it. So the 2020 wellness program, we are in the middle of a quarterly challenge, exercise challenge for employees that encourages them to exercise outside. It's a 60-day challenge. Try to exercise 1,000 minutes over that 2-month period, which comes out to about 15 minutes per day.
Right, a challenge over the last 2 months, keeping up with that number.
Right. Exactly. Again, Jason's kind of already hit on the eventually reopening the administration center. So we've asked departments, we've provided them some guidance on creating a department-specific plan for reopening for the safety of their staff and clientele who come into the building. Is kind of more focused around 3 areas. One is social distancing, the second would be PPE, and then so we've asked them to do those as well as telework agreements, and those have been streaming in from departments. Does anyone have any questions?
Did anyone in the county tested positive for COVID? No.
We had anyone? We had one that was presumed positive by their doctor. They didn't actually do the COVID test. I think it was kind of earlier.
There are a couple of employees at Lasada, if you remember, they were under outbreak. Yeah.
And those were our employees that weren't
One was our employee, and one was an employee of our contracted housekeeping service. Unrelated.
Okay. So, yeah, in that case, our employee was quarantined 14 days then, or that's it? And of course the other one.
Right, so that they were quarantined for 14 days, and then we did a deep clean of their work area and anywhere where they would have been.
This entire building has been deep cleaned by our facilities staff. So they've, offices that haven't been open have been cleaned, and they tagged them to say this was cleaned on April 1st. So. Although it seems that the science is changing on that as we speak too, whether or not high touch services are a source of contamination. I'll say our facility staff, this building, as well as the Justice Center, they've really stepped up and done a fabulous job. I think especially for those departments where there's still some public interaction, they've been. It's never smelled so fresh around here. I'll say that.
I hope you're all the way around. So yeah, it's admirable that Lasada got nipped in the bud with only the 2, right? And we didn't have anything further, so that was right. That was awesome.
Yeah, they do. They're very diligent.
I don't suppose we've had any problems with people resistant to masks.
No, I know at the Justice Center, so from state guidance, they're looking at potentially asking when people enter the building to do temperature checks. So I know there's been some discussion around that with our Crooked Circuit courts and how that will be done, and making sure our employees, if they have to do that they're safe.
Yeah, in Lasada, how often do we test our employees there?
Yale and Lasada do the most effective thing is a sort of a verbal screen, how do you feel type questions, but they also do a temperature check. Obviously, effective with employees. I think what we have to work through on the county end is, for example, if you're coming in to get a marriage license and we say, well, before you come in to get a license, we got to check your temperature, and you say, you're not checking my temperature. I don't want that done to me. What now? You can't get a marriage license? I don't think the county's in a position to say that. So, I think the challenge is we're a government. People are coming into seeking government services. We can ask for compliance, but, if there's not compliance, we certainly don't want to put the public or our staff in a position where, where there's an issue. So, yeah, I'm not gonna wear a mask. You know, I think that's easy to say if you own Costco. You know, you can come in if you wear a mask. It's a lot different to say that if you're a public government. So I think that's some of the issues that we will work through as we open. We will, as the public begins to move around the building, eventually we're gonna require that staff wear masks in public areas. You don't have to sit at your desk with a mask on, but I think I think it's just a visual representation that we care about the public's health, which we do.
And another issue we're working through is WSADA is planning on, probably doing a baseline COVID test for all employees. And, we would anticipate potentially some pushback on that, perhaps some religious accommodation claims. So we've been working with our corporation counsel, and I think we're kind of set now where we feel like we would require it, even if they requested religious accommodation, we probably would not accommodate that, and they would not be allowed to continue working if they did not do the COVID test.
Many challenges.
Hopefully not forever. Hopefully reduced at least. All right, anything else? Thank you. Information technology.
So I think I hit on our telework issues and the way we've been able to do that, and we talked about radio, so unless there's questions on the financials, I'll leave my report at that.
Questions for that? No. All right, county treasurer. Last but not least.
Hello again, everybody. Thank you again for letting Dana in here, having them present, ask questions as needed, and of course, too, we'll see, I think the depository thing, that'll go to board now, right? So, so we'll see what happens with that, but it's a good move to be able to do that. So, I'm going to go through my report. I will give our new committee members and our previous committee members that have come back in here just a little forewarning. I enjoy giving my report thoroughly. So if I draw on a little too much, please stop me. But I do like to talk about our cash because if I'm not full disclosure, what does that tell all of you? Yeah, but it's a serious question. Cash is tangible, so if I don't talk about it, what do you guys think I'm doing with it? So, full disclosure, that's what I like to do. Let's see, so we'll touch on here, we'll just start, my front page typically goes through my entire report. We can look at our cash balance, we were at 26.7 million. Last year we were at 25 million, so we're up about $1.68 million from last year. That's just a horizontal analysis to display where our funds were to what we are at currently. This can be seen largely on pages 2, 3, and 4 that shows what cash and accounts that I directly handle. There are some departments that have their own checkbooks that I do not account for. You would hear about that at those respective committee meetings. Anyways, the reconcile here should show you between our money market payroll and our money market 2 checkbooks that everything ties out perfectly. No errors or anything found. If there was something, I would, of course, tell all of you, but everything is on the up and up. So, going on to our interest, or if you go to page 4, you can see our interest and penalty revenues are down 12% from last year, but I will say we took in more interest and penalty last year at that time. Things can change. Given everything that's going on with everybody's individual finances, how they're running their households during this time, I think the numbers are, as far as interest and penalty, if there's delinquent taxes out there for these people, I think they're making that conscious decision on whether or not they want to pay their taxes or put food on their table. So, you know, we are dealing with a lot of furlough and layoff right now, so that is a driver that impacts the collection of delinquent taxes. So as things start to pick up, I would imagine that they will get back to getting the majority of their bills paid. But for right now, please keep in mind that our budget to actual is at 35% of the budget. I believe we're supposed to be at roughly 33% for the year if we're splitting out our budget equally over 12 months. So this is good. We're still 2% over budget. And you can find the breakdown of that separate interest and penalty on page 4, where it says interest on delinquent taxes, that's $59,000. Penalty is at $30,000. So keep in mind some of the penalty, because in case anybody asks, interest is 1% per month set by state statute. Penalty is 0.5% per month set by state statute, but there are other penalties involved, like with ag use and stuff like that, that we allocate to that account. So just so you're aware of that. As far as our interest earnings go, and I'll touch back on our investments a little bit, but you guys can see on page 4 a list of our investments currently. This is what we have put away and safeguarded. So the number one mission for all of my investing procedures here is to ensure, number one, our safety, okay, that the funds are always safe, that they are readily accessible, okay, and finally is to maximize gain. Now, of course, I do push our banks a little harder because generally when I have funds to invest, it's a larger amount. This is only at given times of the year, peak fixed times of the year, typically in January and February only. I'm using funds that I don't perceive we're going to be using for the next 6 months until we pay out our August settlement. So there's a very limited time frame. I do seek the quote most advantageous to the county, and I will tell you over the past, I think 3.5 years, Port State has always come out on top. So they always give me the best quote. So they're usually 10 points over. I've never said no. Hence why you guys see our Port Washington State Bank CD at $7.5 million, 2%. So keep in mind, I heard about these virus rumblings way back in November, so I took the time to prepare accordingly. The $7.5 million for 2%, you can see I did a CD with BMO for $648,000 at 1.65. Commerce State Bank, this is actually usually just a recurring CD, but I wheel and deal with them for as much as I can. I got 1.8 out of that. So let's see, what else are we looking at here? So the Curlers Fund, that's something that I monitor for the Curlers Association. Our petty cash does not generate interest, and I do have, I have been working with Cornerstone Bank for quite a while now. About 1.5 years, I went over the $648,000, so we had to figure out how to make sure the funds above $650,000 were secured. Okay, so what's the backing on that? And any amount over that $650,000 is FDIC insured, believe it or not. So it's the way that we work their internal cash sweep system with where they put the money and how it gets FDIC insured. It's actually a pretty sweet deal. It allows us to work with them more. So that's a little breakdown on the investments. Just with our banks, as far as Dana is concerned, you guys saw, I mean, they gave a wonderful presentation today about our market outlook, about the economical outlook, about our portfolio outlook. We're sitting around $5.7 million. I will touch back, Supervisor Strom. I did email you amidst the radio program update. I don't know if you had a chance to take a look, but the description on these bonds has to do with the pool that they're being released from. So if it's Ginnie Mae, you may see that as G2. There's probably a G1 Ginnie Mae pool, okay? Or if it's, we're looking at FH, that's Federal Housing Authority. FN is going to be Freddie Mac's, Fannie Mae's. So just so you're aware, but so you guys are aware, the description I'll be quite frank with you guys that the description never worried me too much, so long as I knew that we were invested only in federal marketable securities. Okay, that's very important. That's by our policy and procedure. That's by state statute. That's what I have to do. So those are the confines that I work in. If I see anything funny on these reports that I get every month from Dana, I do ask questions, but generally that's what all of these are for. The identifiers are the CUSIP numbers, so that's how that's all tracked in these stock trading systems. So just so you guys are aware of that. So that takes care of page 4. Now if I could find where it was. Our sales tax, I know Jay touched on it. And I'll bring this in next month for you guys. I track everything that I can when it comes to hard numbers. One of the, here, our sales tax, so they said that we're at $624,500 roughly. Last year we did have a historic month. I mean, it was almost $800,000. The year prior we had $720,000. So, but in 2017 and in years prior, you can see a lower in 2016 for $560,000. In 2017 we had $630,000. 2015, 660. So I would actually say the 625,000 for the month is relatively average. So I'll just so you guys know that. I mean, I would say let's see what happens next month when it comes down, because that's going to be accounting for April. Yes, because there's always a 2-month lag. So we're going to see April come in next month. I would anticipate it lower. People didn't leave their house. So unless it was out to our toilet paper, and being the fact, I don't know if the sundry is exactly sales taxable, so. It is. So maybe we'll see it go up, who knows, right? I mean, there's a lot of, people are buying toilet paper like crazy and hand sanitizer, we can't say. What's that? Right, well, I suppose, well, then we got back to standard buying, who knows? But I would expect that the sales tax will be a little lower. Okay, people weren't leaving their house. If it doesn't, fingers crossed it doesn't. So, Tom?
We're kind of saved now with all the internet services.
Right, yeah.
So,
yeah, I mean, my hope is that it comes in at 680 like it did last year. That's my hope, So, but I don't want to wish in one hand because there's only something you can do with the other. So.
That's why we urge caution on.
Yes. Yeah, I suppose we would have seen a large influx of Amazon ordering and whatnot, so we should get a portion of that. Anyways, okay, so that's how sales tax breaks down. I put on here, you guys can see our budget to actual. The number's at 14%. Keep in mind that only accounts for, this is up to February as far as that goes to the budget. So in February, we're supposed to be around 16%. If, and I say if, you take that total budget amount, you divide that equally across 12 months. I don't know that that's done. In my world, that's what I usually do. If that's the case, then we are a little underneath our sales tax budget going through February, but we'll see how the rest of the year pans out. And just to touch on that with our interest earnings, I hate to back up here, but we are down about 29%. Last year we saw a very large gain in interest earnings, $630,000 for the entire year as compared to previous years, especially since the recession. Those dollar amounts were enormous last year. So anticipated for, but enormous, okay. And we do very conservatively budget here when it comes to interest earnings, because instances like this, so you never know what's going to happen. That being said, with interest, if we do not, let's say we don't earn any interest over the next few months, even though we're going to, but I'm only going to use hard numbers here, or at least relatively hard numbers. We take our interest earnings we got right now, $109,000. I'm expecting about $85,000 when our CD investments unlock in August. I need those to unlock in August, which I'll touch on in a bit. But that'll put us at $195,000. Now, considering the fact that we're going to have generated interest earnings over the next 3 months, I would anticipate that I will be at budget by the end of August. Okay, so then we have, that's gonna be 3-4 months of extra interest earning dollars, okay? Unless the bottom drops out on our marketable securities, which, as we heard from Dana, they will keep an eye on with us, and we will work to keep things advantageous for the county. But I wanted to let you guys know that I should be at budget or over by the end of August. Delinquent taxes, actually trending pretty close to where they were last year. Not even, they're actually up a little bit by about 0.78%. The number of delinquent parcels has increased, but again, I do believe, actually, the increase of 41, some of that comes from the village of Grafton, okay? The town of Grafton, the village of Grafton, and the village of Bayside run 3 installments, okay? So they collect all the way through July 31st. Now, at the end of March is their second installment. If they miss that installment, they're now delinquent. So that does get added to my reporting for the dollar amount due. So just so you guys are aware of that, okay? But otherwise, an uptick of about 11%. Do I anticipate that'll go down? Yes, depending on how people run their own separate individual fiscal year, given everything that's going on. But we will see how that goes. Otherwise, there are currently 4 parcels at the end of April that were up for tax foreclosure. So we went to court on May 1st. I will report again on this next month. 1 parcel was remitted to the village of Grafton. That was where we sat down here, and that went through board where we went to write off the taxes, we'll get the reimbursement for the specials and the foreclosure fees, but that did go through. That is, as far as our end is concerned, we are done. It's all in their name, the checks have been cut, everything's done, okay, as far as I'm concerned here. So, but that does leave us with 3 parcels. 1 parcel I do anticipate will finish. The other one, that has people living on the dwelling, I'm not sure of. So I've been in conversation with them, but I've been in conversation with them for 3 years. So this is a recurring thing. I don't know that they're going to get out of it this time. And the third one is actually a lot out in the village of Fredonia. The house was torn down, it was condemned, the village tore it down. The person that owned it passed. The kids never took it on, so they ended up demolishing the property. I was in horrible despair. And the lot, I don't think the kids want anything to do with it. They haven't paid their taxes. Part of the paying the taxes involves the demolition fee for that, the raising fee. So it's about $15,000. They don't want to pay it. So I do anticipate we're going to get that on August 24th. That is when court reconvenes for this. I keep my fingers crossed that the other 2 will pay. The county does not historically like to take homes with people on the property, so I do work strenuously with my tax foreclosure recipients to get them paid, and then that they take a payment plan. You can see on my report, I have 13 parcels currently on a payment plan. I do always try to get people to take that so they can, the deal is that they pay their taxes on a payment plan. We start with the earliest year and we get them back to 0. And as long as they keep that payment plan, they stay out of tax foreclosure. We are allowed to do that by state statutes. There's nothing in the state statutes that says we can't, just making that clear, but there's nothing that says we have to. Okay, but I do offer it for those who need it. Some people just need it for the discipline, and that's fine, so as long as they get their taxes paid. The interest and penalty, for as cold as this is going to sound, is a plus for us, but it is not a plus for them. The goal is to get them to pay their taxes, so, and get that done. That's what we're basing a lot of our money on, so. Anyway, so I just wanted to say that. As far as my budget goes, I would ask that you guys, if you look at our total, almost 56% for revenues, I do think I have a little bit of distortion in there. The reason for that, as I've explained to Supervisors Malata and Strong and Richard before, but I'll let you guys know, is because when we get funds in to the bank, we have to book them that day, okay? That way it's accounted for timely. And that's just, that's internal control measures, but not every department claims the funds that come in timely. So and sometimes these things come down quicker than the department gets them to me, their notifications for where we book to their cash. So that does sit in that revenue, under other revenue. Right now, I think we have about $70,000 outstanding in that. So that will go to those departments as soon as they claim that. Otherwise, our expenses are actually trending just a little bit underneath budget, which is good, you know, roughly 0.5%. But one of the things I pride my budgeting on is being able to reasonably, accurately budget for our expense. So it's very important to me. It's something I worked strenuously on last year. It appears to be doing everything I was hoping it would. So because what do we say? If you're way under budget, well then why are you budgeting for it, right? So because we're taxing off of this, okay? But if I'm too far over, well obviously I didn't do a good enough job. So it's been something I've been trying to get in line for a few years. And, the way my year's going so far.
The whole county, we're doing a better job.
Yes. So, I mean, I would say that goes to every department, but, you know, I mean, as far as it goes to mine here, I'm proud of it, so.
For example, treasurer's office, right?
Yeah. So otherwise, I mean, you guys know, I'm sure they'll touch on it in the next few months. Budget season is upon us. It's one of my favorite seasons of the year, so I have nothing else unless you guys have anything.
Josh, I have one question, page 2, drainage district number 2 billing,
Yes.
There's no number in there.
Correct. So that would have been.
That was billed out, correct?
Correct. So just as a little background, the county treasurer by statute is the collector of all drainage district payments. So I'm the one who has to account for those revenues for those drainage districts. We have 2 of them in the county, Drainage District 1 and 2. What that stands for is the receipts, they just, that didn't happen last month. So that's all that means. So we'll see that number fill in as the year goes on.
I guess my question is, you don't know what the number's gonna be, do you?
No, I know we billed out about, I think, I did this with Attorney Herbrand, so I gotta refresh this in my head. I think it was about $6,200 for the 2020 billing, okay, and that's due by the middle of July, okay. We have had a number of payments in, but that's, again, it's something that I'm statutorily bound to do. I do report on it because those monies get held in our money market 2 account, but when they're expended, you know, of course, we have to pay out those orders too for that district. So,
and when do you suspect the drainage district would get that money?
So the payment has to be in, and we have been getting payments in steadily. It's just we didn't get much last month. But we do get those payments in, but that bill is due by the end of July. If there's anything outstanding on that, though, keep in mind that does go to the tax bill as a special. Okay, so with interest. So and Attorney Herbrand, he's charged with seeing that through, so as the secretary. So
None of you on the board would know this, but there's 2 drainage districts in the county, and they're both in the town of Belgium. So.
yeah. Yeah, and actually, I will say this, the Village of Belgium is a large recipient of Drainage District 2. So a lot of my questions that come from the residents are, they pay a municipal water utility, why are they paying into the Drainage District? Why should that happen? The reasoning behind that is because the drainage for the municipal utility actually goes into those ditches. So because that is the case, the Village of Belgium is part of the Drainage District. And also note that it's next to impossible to dissolve a drainage district, so it's very expensive. There's a lot of legal issue with that. There's a lot of expense that has to be put in to get that abolished to the courts, where the courts are the ones that allow the drainage districts to happen. So generally what I've seen, there are a lot of other counties, not too many, but quite a few that have drainage districts, and actually They meet once a year because they're supposed to by statute. And then they go, everybody here? Yeah, motion to adjourn? Aye, and they leave. So, I'm one of the few, if you want to say, that deal with active drainage districts.
And it is something that's very important to the local farmers, because especially with the recent downfall of rain we had, it's very important.
Yeah, and they're doing more work, they're excavating more out.
Yeah, well, District 1 is done, District 2, we're hoping to get some monies to clean District 2 out, so.
Right. Yeah. So, but otherwise, I always show this to you, Paul, and I'll show this to the rest of you guys. This is my pledge securities from Port Washington State Bank. So anything over and above that $650,000 has to be pledged and collateralized to the county, okay? They purchase this on our behalf and hold it in trust until we don't need it, and then they go ahead and sell it off. So what that means is we have about $24 million sitting with Port State presently in their bank, okay? But they have, their book value on these securities is just over 26 million, so we're covered. Okay. So just to further note to all of you that our funds are safe. So. Is there anything else?
All right, thanks, Jeff.
I promise I won't talk as much next month. And as the year goes on, I start to go, does anybody have any questions? So, but, with new committee,
I'm just gonna keep track of that.
I know, hey, I did it once, okay?
All right, so next meeting date.
So, the reason that's on the agenda is with a new committee, just to, decide amongst you if this time and this day works for you. So you are, it's the fourth Thursday of the month at 8:30 in the morning.
So, all right.
The only thing for me, earlier would be better, but I'm just one of 5, so. What's that?
That's early enough for me.
Yeah. 8:30, yeah, it works well for me still with like, with kids and stuff. So we got one, I think, at school.
So leave it as is?
I think so, I think it's okay. We usually don't go this long either, Tom, we usually, this is.
Well, don't worry, if I had to get up and leave, I would have left.
Yeah, okay, I understand that.
We usually end at least 10 minutes earlier.
At least.
Yeah, well, an hour and a half, 2 hours, I think is fairly normal for us.
We had some big items.
Yeah.
And being new and everything. So, all right, good. And then as far as Zooming, anyone plan on doing that for meetings in this group? Okay. And I'm sorry, Tom, it's still good for you guys too this time. Yeah, okay. All right. All right, have a motion to adjourn. Second. All those in favor? Aye.
Scott, you going up to your office?
Yes.
Stop in.
Oh, I got it in my truck.
Oh, okay.
You wanna go, or you can stop in, I would love to show you guys my office.
Yeah.